Good morning, Thrashers. Welcome to another episode of the Block Thrasher Daily Crypto Update, where we are simplifying crypto, making it as simple as possible with daily news, commentary, analysis, and education. It is Friday, April 30th. I hope you're doing well. I hope you're excited to be looking forward to this weekend. I am recording this quite late today. It is currently 9:25 in my time zone. Why am I so late? I'm late because I had to spend a whole bunch of time this morning digging deep into this Etherlight ICO and airdrop and trying to figure out whether this thing was legit or whether it was a scam. And it turns out I've got a scam alert, ladies and gentlemen. I am almost certain, 100% certain, after digging deep into this thing, that it is a Ponzi-like scheme, and I'm going to tell you why. I'm going to cover that at the end of the episode. I'm going to go into the details and give you a little bit of history. This thing looks a lot like BitConnect. All right, let's just jump into our word of the day segment. Word of the day is exonumia. Exonumia. It means items or tokens or metals that resemble money but are not intended to circulate as money. Exonumia, that word numia. Maybe you're familiar with the word how is it said? Numismatic, right? Which is speaking of the numismatic value of a collectible token. So if you have a silver token or you have a gold token, the base metal will have value. And then there's a numismatic value, which is the collectible value, basically on top of that. And exonumia has that numia in here again, and exo out of numia. So anyway, maybe you've seen these before. It's like someone's giving you a round to it. Anyway, these are items or tokens or metals that resemble money, but are not intended to circulate as money. I don't know how to make a connection to crypto, but that's okay. Maybe there are some cryptos that resemble Bitcoin or legitimate cryptos, but are not. And Etherlight would be an example of that. All right, let's take a look at the market and see what's happening. Currently, the total crypto market capitalization is up 4.3% to $2.254 trillion, not billion, trillion dollars. Can I get a yes? Can I get a booyah? Money coming into the market is a good thing. Where does Bitcoin dominance sit? It is currently 46.6%, and Ethereum is up 14.3%. Sticking with the trend that we've been seeing of late. Ethereum gas prices are not too bad at the moment. Standard is 72 GWAY. Bitcoin is up 9.7% on the week, up 5.3% in the last 24 hours. Yes, Bitcoin finally finding a little bit of a pump after we've seen the alts doing so well. And as we can just see, if you just run through the weekly increase, Ethereum up 14%, Binance Coin up 18, almost 19%, Xrp up 35%, Cardano up 17%, Dogecoin up 20%, Polkadot up 10%, Uniswap up 17%, Litecoin up 6%. It's been a good week for alts, and Bitcoin in the last 24 hours starting to come around and follow the alts. Up 9.7%, is currently $56,413. Yes. Ethereum continuing to push higher, reaching all-time highs, currently $2,759. It actually dropped a little on the 24, just negative 1%, but nothing to really make note of. Binance Coin is currently 606. Unbelievable. XRP, $1.57. And now you want to talk about something that is truly remarkable. Truly remarkable. There's still so much uncertainty about what's going to happen with XRP and this SEC ruling. But right now, the market's saying, we don't care. We just don't care. A lot of takeaways from that potentially. And I do believe we are going to cover a story about XRP today, so sit tight and wait for that. All right, Cardano, $1.35. Still not quite reaching all-time highs, but pretty close. And there's some good news with Cardano. News about global adoption and use cases coming out of Africa, especially. And, this has sort of always been the vision, in a way, of Charles Hoskinson with Cardano. And it's a really super slow burn, slow growth process of providing real utility to some of the impoverished nations or the emerging economies and give them tools to sort of leapfrog. This is the theory anyway. Changing protocols, changing processes, changing the way people operate in the West is difficult because you've got traditional legacy financial systems and banking systems, et cetera, in place. And so that's difficult to onboard significant change, where some of these other places, you have all these people that are just unbanked already or don't have, and you can just like leapfrog is the idea, these people, by just getting them a smartphone, getting them an internet connection, boom, getting them products and services on the blockchain. And this is happening. We're going to look at the stories. I won't go too far into it because I don't want to give it away too early. All right, Dogecoin. Currently 31 cents. Dogecoin has remarkably, in a way, just continued to hold. Obviously, building network effect. Again, as always, I'm concerned with the fact that a whale could dump at any given time, but we shall see, right? Hey, it's the world of crypto, and sometimes things can surprise you, even when there are fundamental issues. Just because of size, that's not the fundamental issue. I'm just saying because of the size of the market, it's still relatively small. You can see things continue to pump or hold value in terms of price. Polkadot, currently $36.43. Uniswap, $39.93. Litecoin, $268.92. Bitcoin Cash, $951. Chainlink, $38.24. And we're going to talk about Chainlink today in connection with the Grayscale Trust's offerings, Chainlink being one of them. VeChain, 19 cents. Stellar, 52. Solana, 42.84. I think it's a good time to pick up some Solana personally. Not financial advice or investment advice. I don't do that. This is for educational purposes only, but I will share with you my thoughts. Take them as you will. THETA saw a nice pump this last week, up 14.2%. Still not quite at its all-time high, but $11.31 currently. Filecoin, 157.85. What else do we have that might be notable? Monero obviously being one of the leading privacy coins. It's at an incredible $415.11. I say incredible just because, I often go back to where I remember prices to be in 2013, 14, 15, 16, and to see some of the prices today it's just sort of mind-blowing. What else might be worth noting? Polygon up crazy, 146% on the week. It is 86 cents. Polygon Matic, the layer 2 Ethereum sidechain. Crypto.com coin up 12.3%. It is 19 cents. Trying to get back closer to its all-time highs. Ethereum Classic, $35.90. Now, Ethereum Classic is interesting because it might be an option for the proof of work miners. And we're going to talk about a story, I think, with that today, where the Ethereum miners are talking about revolting again and possibly trying to do another hard fork or chain split or whatever. So a little bit of contention, a little bit of contentious activity going on there. We'll look at that just briefly. Algorand up 21.6% to $1.42. Algorand is one of those projects that just seems to be undervalued to me. Phenomenal chain, so much value there, but only at 42 in terms of market cap. Huobi token doing really well, as we have seen the exchange tokens typically do, up 22%. And when everything else is up, they perform well. Avalanche up 30% to $31. All right, I guess that's going to cover it for the market today. I don't want to go on with that too long. Let's see. This is going to be for later on today. We're going to cover our terminology. First story of the day is about more moves for adoption. Coinbase is now pairing with PayPal to enable easy crypto purchases. And this is kind of interesting because PayPal's already integrated crypto purchases. However, they're somewhat limited in the crypto coins that they offer. And so now Coinbase is going to be allowing its users to buy cryptocurrency with their PayPal accounts. So this is a good thing, right? You know, a lot of people who have a PayPal account, they might want to jump in on one of the coins that isn't available currently in PayPal. This move was announced on Tuesday and is a major signal of crypto's increasing mainstream acceptance. I agree with that. All right, moving on to the next story of the day, the Xrp lawsuit. What is happening with the Xrp lawsuit? Now, Ripple is accusing the SEC of extrajudicial tactics. Extrajudicial tactics, a little bit of a tongue twister, with its MOU request, its Memorandum of Understanding, or I think that's what that stands for. Maybe they'll state it here. Thanks to a string of positive legal developments, XRP's recovery on the charts and its alts relisting by a few exchanges, optimism in the community is as high as it has ever been. And we certainly saw that with the price increase, just jumping back to verify, XRP up 35% on the week. So certainly this is true. In what is the latest salvo between the two, the defendants have now responded to the agency's letter to them, a letter which for the first time disclosed the full breadth of the MOU requests they sent around the world. In the aforementioned response, Ripple Labs counsels took issue with quite a few points the SEC made. For starters, the defendants alleged misrepresentation of the question of how many entities and individuals the SEC was seeking discovery from, with the defendants asserting that the agency will be leveraging MOUs to do the same. According to Ripple Labs, of the 30 different entities and individuals, more than 20 of the MOU targets reside in jurisdictions where local regulators have determined that XRP is not a security. That is quite interesting. Japan, UK, and Singapore. I was not previously aware of that fact, that Japan, the UK, and Singapore have already determined XRP not to be a security. Seems to be a huge point to me. Fascinating. The SEC's discovery requests, the blockchain firm alleged, serve these entities with compulsory process through MOUs into which the defendants and the court will have no visibility. The aforementioned point is an extension of an argument raised by Ripple's counsels on the question of the SEC's discovery motions. At the time, the defendants had argued that the SEC was deploying extrajudicial tactics that are not available to defendants or other litigants and should not be available to the SEC here. The letter added, the compulsory process served on those foreign entities and individuals by foreign regulators seeks incredibly burdensome and extensive documents, including documents the SEC can get or has already obtained from defendants. Finally, the defendants also opposed the agency's contentions that they violated privilege by sharing FCA cover letter under seal with the court. According to the defendant's counsel, however, the SEC failed to assert any claim of privilege when it produced those letters to Ripple. The timing of this development is interesting, especially since, as the aforementioned letter highlighted, the defendants were preparing for Judge Netburn to take up the MOU issued during the telephonic conference on the 30th of April after their first reply was filed. So, Ripple taking issue with the SEC's fishing expedition is basically what's going on here. That's one of the things that these three-letter acronym agencies like to do and can do and have the power to do, it seems, is to bring accusations and then in the process require a whole bunch of people to produce documentation that might be then damning to build their case. Moving on to the next segment of the day, we've got some positive news for Cardano. Cardano announced second major partnership in Africa. IOHK and World Mobile have teamed up as an initiative that will use Cardano's blockchain to create digital identities, mobile internet connection, and financial acceptance to communities in Tanzania. Tanzania is set to benefit from Cardano. The continent of Africa, consisting of 1.3 billion people, huge population, has a huge problem with internet connection. As revealed, more than half of the population, 700 million, have no access to it. Tanzania is no exception. So, as announced yesterday, Input, Output, and World Mobile Group revealed a partnership that aims to establish better access to social, digital, and financial services in Tanzania through Cardano's blockchain. Mickey Watkins, CEO of World Mobile, emphasized the mission of the organization together with their partners from IOHK. He said this: World Mobile has built network based on a new relationship between people and connectivity in which ownership, governance, and identity work to empower the user and make access available to all in a sustainable way. I'm delighted to have formed this symbolic partnership with Input Output. Together, our efforts will open up a new world. The news came just a few days after the proof-of-stake blockchain platform announced its partnership with another African country. On April 27th, Cardano teamed up with the Ministry of Education in Ethiopia, and we did talk about that story the other day. The network, together with the Ethiopian institution, aims to create a blockchain-based national ID and attainment recording system in the country. Currently, Cardano is the sixth largest cryptocurrency by market capital. We know that. So Cardano continues to push in the direction in its stated goal to provide services to these African nations. And this is not necessarily going to bring an immediate boost in the profitability of Cardano. However, it's a long game. As I stated earlier, it's a slow burn. It's onboarding people. It's about volume. Okay, so you think about business, for instance, take a business like Starbucks, who has inflated prices, no doubt. You could get cheaper coffee elsewhere. The Starbucks business model, one of its business models, one of the things that makes it profitable is the amount of volume. They have to have cars in that drive-through all the time. So the markup, actually, believe it or not, on their products isn't necessarily that high. After they pay their employees and they go through all the compliance and the regulation and everything that companies have to do, and then the cost of their cups, which increasingly rises, and the cost of coffee, which is increasingly rising, and everything that goes into it, at the end of the day, per cup, they're just not making that much money. So they need that volume. And so this is a similar strategy here. Is sure, someone might say, well, people in Africa don't really have any money, and that's true. They have almost no money. But onboarding this number of people, even if they start to use the Cardano blockchain and bring little bits of it, will in turn eventually, because of volume, produce a lot of profitability for the network. And it is a good thing. And on top of that, the whole point of the vision behind this is to improve these people's lives, to open up doors and possibilities that might have otherwise been closed to them previously, to prevent fraud. In these countries, there's so much fraud that occurs. And with the blockchain, it can prevent that sort of thing. So with the educational thing, for instance, they're going to use the Cardano blockchain to keep record of students' grades, which will make it easier then to prevent fraud and in applications for college and this sort of thing. And so then as these entities and institutions and individuals over there get used to using the Cardano blockchain, they can leapfrog into using it for their businesses. And some guy in Africa who has some sort of very simple business, maybe he's in an area where there's a dump, but there's no trash services, and he's doing it on his bicycle or a rickshaw, or maybe he has an auto and he wants to engage in business, but he can't get a bank account. He doesn't have these services, but he can do it with his phone, and his customers get a phone through World Mobile, and they can begin to pay in very, very small amounts. Maybe he can't charge that much, but relative to for us here in the West, but for him, it creates enough to provide for and his family. Just so he starts out, and it's just small and it's incremental and all these type of things that can help these countries emerge. So it is exciting stuff. Enough about that. Let's move on to the next segment here. Microstrategy is in the news again. Our buddy Michael Saylor over there. Gotta love Michael Saylor and Microstrategy and what they're doing. They see up to 52% revenue surge as Saylor confirms more Bitcoin buys ahead. New figures show certain revenue sectors boomed by over 50% in Q1 of 2021 compared to the same quarter last year. MicroStrategy, the company which owns over 91,000 Bitcoin. That's mind-blowing. Although, 21 million Bitcoin, so not even to a million Bitcoin yet. I mean, they're only a tenth of that. Lots of room to continue to grow that. Saw an astounding surge in revenues. MicroStrategy saw an astounding surge in revenues in Q1, its latest figures confirm. In a press release on April 30th, CEO Michael Saylor revealed that the company's success had gone far beyond its Bitcoin profits. And he said holding Bitcoin creates substantial value. So, of course, the question that this raises is, will other companies follow suit? But they will. I think that's part of Saylor's whole strategy is like, watch what I'm doing, guys. I'm going to prove this thing here. And he's doing it. Here's a good article from Forbes, and I thought we'd just talk about this real quickly. Here are a couple things that crypto players wish they knew when they started, coming from people who've had experience in the crypto space for some time. The cryptocurrency industry has grown significantly since the launch of Bitcoin in 2009, with people joining the space at varying points since then. As with many aspects of life, hindsight can be 20/20. Knowing certain information or concepts earlier may have proven helpful. In February 2021, the author here wrote an article on 5 things he wished he knew before getting into crypto. Subsequently, he's asked crypto YouTuber Nicholas Merton and podcaster and trader Brian Krosgaard about one thing they each wish they knew before getting into crypto. And I thought about this, and I certainly have learned a lot of things as well. And maybe we'll pop a discussion on this up in the group sometime, someplace anyway. What are the 2 things that they said? Number 1 is easing into investments instead of timing them. And I absolutely 100% agree with this. As told to me via email correspondence on March 24, 2021, Martin wishes he had known how powerful dollar cost averaging can be. He added, simply put, averaging into Bitcoin or Ethereum at recurring periods of time in order to balance out volatility and outperform the markets. The creator and host of the popular Data Crypto YouTube channel, Merton, I don't know how he pronounces his name, got into crypto in 2016, according to my email correspondence with Merton. So around the same time that I did. I mean, I first got exposed to crypto in like 2009, but really just dove in 2016 and started researching heavily at that time. But I agree with his statement. Dollar cost averaging, if you're not aware with what that is, and sometimes we use the acronym DCA, involves buying a certain amount of a financial asset at a set recurring point in time. So $10 of Bitcoin every week or $100 every week. And you can automate this now with a lot of platforms, whether it be crypto.com or Coinbase, etc. What this method does, it achieves a type of average purchase price for the asset over a time period. Given the ups and downs of the crypto market, as well as stocks and other traditional markets, purchase timing can be, tough. And some people try to do that. They try to time the market. And for the most part, unless you're very, 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 very lucky or very, very, very good, you're going to get wrecked, right? Especially on the shorter time frames. However, with dollar cost averaging, you invest your money in equal portions at regular intervals, regardless of the ups and downs in the market. So what this then does is it balances out that volatility, and you end up having an average cost of that asset at a much lower price overall, rather than if you try to time it and make bigger, larger purchases, because you can just be wrong about the timing. And so it's pretty much a proven fact that dollar cost averaging in to really solid crypto projects over time will bring the best, greatest profits and benefit for most investors. Here's the second point that they stated was expecting and accept notable price drops in bull markets. When asked about the most important thing he wishes he knew when he got started in crypto, podcaster and trader Brian Krogsgaard, known as Ledger Status on Twitter, mentioned the volatile price action seen in crypto. He said, "I wish I knew the depth of retraces that are common even in quality assets during bull market retraces." Absolutely true. So what happens here, the reason he's saying this, is that people panic. Even when they know there's a good solid project and the price has gone up. So they panic. And when it starts to drop or it takes a serious hit, they're like, oh my gosh, it's going to zero. I got to sell and I get out. And then they do. And it's still a bull market and the thing starts to bounce back and then they can't get back in anywhere near the price that they sold. And they have to buy back higher and they just take a big loss. He says crypto markets are significantly more volatile than traditional markets in both directions. The importance of well-timed entries shouldn't be underestimated. So I agree with both of those statements. Number one, dollar cost average in. There may be some exceptions, of course. If you have a big chunk of money and the market is down and you know it's down, well, take for instance 6 months, 8 months ago, whatever it was, when Bitcoin was down at $4,000 or $5,000, down from an all-time high previously of $20-something thousand. Pile in a moment like that. If a really solid crypto asset project is down 50, 80%, pile in. Especially if it's in a bear market, pile in. And then dollar cost average, continue to do that as you earn money from your job and just invest that way over the long term. Enough on that. Let's move on to the next segment here. Grayscale Chainlink Trust up 41% since February inception. The Grayscale Chainlink Trust has declared they are up 41.34% since their inception at the end of February. Yeah, Grayscale's been doing quite, I meant to say Chainlink. Chainlink has been doing quite well. Really since its inception. And my expectation is here's actually, I'm just going to walk through this really quickly because in one of our groups the other day, someone asked me, what Grayscale trust would you jump into? Provided the list of Grayscale trust assets. And I responded, I'm just going to share that with you really quickly here because with Grayscale, they now have a basic attention token trust, Bitcoin, Bitcoin Cash, Chainlink, Decentraland, which is also known as Mana, Ethereum, Ethereum Classic, Filecoin, Horizon, Litecoin, LivePeer, Stellar Lumens, and Zcash Trust. So just a little bit of analysis on these. With Ethereum Classic, the pro would be this. It is supported kind of by IOG, also known as IOHK, right? Which is the Cardano team. They do provide support in terms of working on the core code and providing wallets and this sort of thing. However, it's not really their primary focus. Cardano is their primary focus and other things related to Cardano. The con with Ethereum Classic is that it has had too many 51% attacks. Another issue with Ethereum Classic, though, might be that when Ethereum does launch 2.0 and go completely proof of stake and shut down the proof of work miners, some of them might transition over to Ethereum Classic, which could grow that network a bit and however, that being said, the con is it's had too many 51% attacks and it moves with the market, but there's nothing significant going on there for me. So my answer would be no. That would not be my top choice if I was picking one of the Grayscale trusts to go into. Basic attention token, I believe, could explode if they do get the proposed native DeFi platform integrated into the Brave browser. Now, they already have a wallet, but they're talking about integrating more deeply the wallet and a DeFi platform into the Brave browser, and even with some onboard on-ramps with being able to purchase with from your bank, with fiat. Right now, they work with Uphold, which I don't particularly like, but I could see some significant upside potential for Basic Attention Token if they did create a DeFi Uniswap type of exchange that was decentralized exchange that was built in, and liquidity pools and all the other things that go with it built right into the Brave browser. If they can pull that off, I just, we'll see. But so that would be one of the options. It'd be my second choice is what the conclusion there is. Bitcoin Cash, you might as well just be in Bitcoin. Actually, I'd just rather be in Bitcoin. So Bitcoin Cash would be a no. Mana Decentraland. Now I think it's seen its better days in terms of a big pump, but and it's too tied to the game in my view, but it's kind of interesting at the same time and how they might expand that ecosystem, so, but it'd still probably be a no for me. Filecoin has hit its top and will just move with the market, I believe. So that'd be a no. Litecoin, same as BCH, no advantage over Bitcoin. I don't see any really compelling reason to hold Litecoin rather than Bitcoin. And XLM, Stellar, it's a good project, but I couldn't do it because I can't stand Jed McCaleb and his checkered past with Mt. Gox and XRP. And, so yeah, that'd be a no. Now, Stellar always seems to kind of underperform in the market too for some reason, and then it has these occasional pumps. I think it's a good project with good technology, but those issues for me would just make it a no. Zcash, I mean, it's a decent coin for privacy, but Monero is better, and I'm kind of surprised that it's on the list, just because of its market cap and just its history and its lack of excitement. There's just I just don't know exactly why it's on the list with Grayscale, to be honest. Unless they're like friends with some of the developers or something or what. But anyway, it's there. But again, just no for me. It'd be a no. So Link is the only one that seems to have any potential for gains that might surpass Ethereum, in my view. And the original question was, aside from Bitcoin and Ethereum, should I be in any of these? Link has done very well, and it has real use with its Oracle technology. And if it continues to move toward being blockchain agnostic, which they're doing, I think that's a good thing. And so I see potential for Link. So my conclusion would be Link out of the options, and maybe for a more speculative position, Basic Attention Token when it comes to the Grayscale Trust options that are available now. And obviously they're going to add more in the future, so those options will be expanded. So here's moving on to the next segment. The Ethereum miners strike back in a bid to retain proof of work mining. In a bid to save the Ethereum mining community, a group known as the Ethereum Genesis Foundation, or the EGF, successfully hard forked the chain to continue proof of work POW mining. With the ETH 2.0 upgrade well underway, the switch to proof of stake POS would render miners redundant. What's more, miners claim they are slowly being phased out even before ETH 2.0 is fully rolled out. Community splits are difficult at the best of times, more so how the original chain tends to fare better. With that in mind, is Ethereum Genesis doomed to fail? Ethereum Genesis looking to continue POWs. So the EGF successfully initiated the hard fork of the Ethereum mainnet in mid-April, which they called the Maple fork. They intend to save the proof of work mining community and produce a forked token called Ethereum Genesis. So here we have another chain split on top of Ethereum Classic and all the others. On why users would prefer this chain, Ethereum Genesis, to the original Ethereum, they say that the Ethereum Foundation's approach to proof of stake makes it less decentralized than proof of work, as most beacon chain validators run on either AWS, Google Cloud, or Azure. They also mentioned the minimum staking requirement of 32 ETH, currently close to $88,000, is prohibitively expensive for the average person. I would agree with that. I would actually agree with both of those statements. Our first priority, according to the Ethereum Genesis group is to save the miners across the world. They have been securing the Ethereum blockchain since the beginning. Therefore, we will stay a pure proof-of-work blockchain. We do not agree with Ethereum's future path forward with a pure proof-of-stake model. Core devs are considering the implementation of Ethereum Improvement Proposal EIP 3238 and the London hard fork scheduled for July. This difficulty bomb increases the difficulty level of proof-of-work puzzles. The result is longer block times and therefore less reward for miners, which pretty much means it would just be no longer profitable for them, so they're going to drop it. The difficulty will increase over time to the point of Ice Age, when mining becomes so difficult it's not economically attractive to do so. Founding member of EGF, Earl Mai, said the difficulty bomb is the first step in ending proof-of-work mining on Ethereum, but thanks to the Maple fork, this code has been disabled. The Ethereum Genesis Foundation has disabled this code forever so that mining can continue indefinitely. All parameters needed to enable the fork in the Geth and Open Ethereum code bases are submitted on GitHub for easy setup of nodes, including fork configuration changes. The community responses to ETG has been underwhelming with little coverage of the split. Yeah, all this is going to do is just create another coin that isn't gonna do much. Yeah, this is a probably a misguided attempt here. Better to just move on to mining other things, and there are other things that can be mined. Not as profitably currently as Ethereum. However, some of these projects like Ergo, if you're a miner out there, if you are an Ethereum miner, well, you probably know already, but you can go to What to Mine if you're new and run the data and find other options to mine. More mass adoption news in this segment. Fidelity jumps into crypto analytics with a new product. This is actually pretty cool. Fidelity Investments is launching a new cryptocurrency analysis platform called Sherlock for institutional investors. Sherlock is built to help institutional customers make informed investment decisions in cryptocurrency assets according to the market materials. Now, I have no idea what the cost of this thing is going to be. If it's for institutional investors, probably quite high. The website is sherlockanalytics.com. They are going to provide a dashboard with all kinds of useful information. You're going to be able to explore data in an easily customizable dashboard. You'll be able to access data through flexible delivery, including graphical user interfaces, CSV, and API. Bypass the need to learn code. Complete data coverage. Aggregated data. Explore blockchain market, social news, and development ecosystems. Unify your data under one vendor. So this is just more evidence that crypto is going mainstream. This is going to be an aggregate type of platform provided by Fidelity, where they're going to pull in all the data from leading industry providers, display it in an easily digestible way where you can run all types of analysis. They have an experienced team of data scientists with deep knowledge of blockchain technology. What can it do for you? You can unlock patterns in the data to help you understand the market and surface new opportunities. Gain meaningful insights by leverage multi-category data and research to evaluate assets and ecosystems. Leverage unique development metrics derived from GitHub data to explore early-stage projects that have growing and engaged developer communities. Gain insights into crypto assets, development ecosystems to anticipate trends and find the right partners. So you've got big data, you've got big tech coming in here, creating resources for these institutional investors to give them a little bit of an edge is the idea. Moving on to our final segment. This is what I'm going to talk about. This Etherlight Ponzi scheme. But before we do that, just a note from Forbes.com. Ether cryptocurrency scammers made $36 million in 2018, double their 2017 winnings. Anyone with stashes of Ether cryptocurrency might want to watch out for increasingly cunning scammers who found out how to make big funds with simple swindles. In 2018, tricksters made $36 million by dumping Ether owners into handing over their money for no one's profit but the crooks. That was double the $17 million for 2017, according to a report from Chain Analysis, which tracks cryptocurrencies for all manner of government agencies, private entities, and exchanges. Chain Analysis classes scammers as different to hackers who exploit bugs and outright steal cryptocurrencies, such as those who stole $32 million in Ether in 2017. Indeed, hackers are making more than scammers thanks to repeat smash and grabs from 2016 through 2019. And while the number of scams actually started declining through 2018, they were bigger, more sophisticated, and vastly more lucrative, according to the analysis exclusively provided by Forbes. Chain Analysis found more than 2,000 scam addresses on Ethereum, the blockchain-based platform on which Ether, also known by its acronym ETH, is distributed. Those accounts received funds from nearly 40,000 unique users over the last year. Classical Ponzi schemes are working. According to Philip Gradwell, chief economist at Chain Analysis, one of the most significant scams of 2018 was the classic Ponzi scheme. This saw scammers send out emails to Ether owners asking them to contribute money for which they'd see a guaranteed return. That is the number one red flag. If you're being asked to contribute Ethereum in order to see a guaranteed return, Ethereum return, it's a Ponzi scheme. Of course, the return was simply derived from other people contributing to the pot, not from any genuine investment. One of the most significant pyramid schemes was that of 333 ETH, said Gradwell, which made off with $3.5 million worth of Ether running on the Ethereum-based dApp decentralized application. It promised a daily 3.33% payout from an initial buy-in. Though it was called out as a scam, it still attracted a significant number of Ether owners. Forbes attempted to find contact details for 333 ETH, but its Russian language website was down at the time of publication, and there were no contracts listed in the site's registration, no contacts listed in the site's registration details. The other scam, which was leading to more significant loss in the first half of 2018, was the fake initial coin offering, or ICO. Gradwell said this was down to an ICO fever in the early stages of last year. In some cases, entirely fake ICOs were created with legitimate-looking websites and campaigns behind them, encouraging people to buy up some fancy new currency. The coins then mysteriously disappeared as the ICO turned out to be a fraud. Finally, standard phishing, where unwitting victims were duped out of their account passwords. Once inside Ether wallets, the hackers ransacked the cryptocurrency within. Moving on to the Etherlight, and I'm calling it out now. Prove me wrong. I believe time will prove me right. The Etherlight Ponzi scheme. This is the website here, etherlight.org, Etherlight pre-ICO. They are selling Etherlight. You can buy it with Ethereum. You can buy it with Bitcoin. They are also giving an airdrop, which I made our users aware of in the Facebook group. There are a lot of legitimate airdrops, and this likely will be an airdrop. You probably will receive some Etherlight. What they are doing is they are giving for every Ether that you hold, you will get 10 Etherlight. But here's where it gets interesting. This project, Etherlight, is being developed, is essentially the same people that are behind the Open Alexa protocol. What is Open Alexa? Open Alexa currently trading for $5.68. Open Alexa is the actual pyramid / Ponzi scheme behind Etherlight. So from what I've gathered, this is what's going on. Etherlight is a clever way to create an airdrop and an ICO and bring in a huge user base with promises of a really legit sounding platform, right? Where they're hard forking Ethereum, but they're doing with all the things that Ethereum 2.0 promises, fast transaction times and low fees and all this sort of thing. And everything on the site looks very legit, fully complete with the EVM, the Ethereum virtual machine, meaning that any existing Ethereum smart contract can be developed right on it, developer friendly, interoperability, high throughput, open source, staking, proof of stake, staking rather than proof of work, and just all the things that look very promising. So everyone that owns an Open Alexa, that owns the OAP token, is going to receive an airdrop of 210 times. So Ethereum holders get 10 times. So for every Ethereum you hold, you get 10 Etherlight. For every OAP token that you hold, you will get 210 Etherlight. So the current holders of OAP, Open Alexa protocol, are going to receive the lion's share of this airdrop. And then here's where it starts to get even more interesting. They have this system where you have to buy in initially for 1.1 Ethereum, which is $274. Now, when you do this, this opens up, they call it, what do they call it? They call it like 2x2, or the binary. They talk about all these different things, right? This basically allows you to then level up after you already put in 0.1 Ethereum, which is $274. Now, here's what's interesting about this. And this is where the Ponzi scheme thing, this is how this works. So, Bob comes along and he sends 0.1 Ethereum to the smart contract, to the DApp, to the smart contract, right? Open Alexa, smart contract. Bin Pro, whatever they're calling it. He then immediately gets more Ethereum back than he put in, and he thinks, this is awesome. I'm earning this great return. But here's what happens. When Joe puts in his 0.1 Ethereum, $274 currently, 84% of it goes to the person who invited him. See that? 84% goes to the person who invited him. Now, where does the other percent go? I didn't see where that went. But I can tell you where it goes is into a pool that is then used to pay the people before. So this is how it works. And then Joe, or Bob, I was using Bob, invites Alice. Alice puts in 0.1 ETH, and Bob gets the 84% of that. And then the rest of the portion goes in somewhere, wherever, whatever. And this is how it works. And so the people, you have to keep bringing in new people, because the new people is where the money is coming from to give the ETH, right? And then they've got these levels where you can level up. And this is from a video. I'm very thankful to one of our community members who watched and recorded a recent Zoom meeting where they outlined all of this. You can't find any of this on the Etherlight site, though. It just looks like a typical project with a normal ICO and a normal airdrop, et cetera, et cetera. But then you get into these Bin Pro plans where you put in another 0.1 Ethereum, $270 approximately, and you get 10 of the OAP token, the Open Alexis Protocol token. Now, if you want to jump to silver, you get 30. To gold, put in 1 ETH, $2,700, and you get 100 OAP. You don't know what these things are going to be, how they're going to be valued, or what they're going to be worth. Diamond, 3F, platinum, 5F. And then, see if I can scroll the video for those who are watching. Oh, here you go. Look at this screen capture here. This is how much you can earn with Open Alexis binary program, they call it. 3,000,006. No, that's not. That's 36 million. 100,000 pairs can get you 15,000 ETH. 15,000 ETH times 2,400 equals $36 million. 36 million. You get your Lambo, you're going to get your jet, all this sort of thing, right? It's incredible. Is anyone else calling this out as a scam yet? Yes. Some of our experienced traders over at bitcointalk.org, there's a thread. Crypto Viking, 4-star senior, for coin, I guess they do coins on this thing, senior member. A few days ago, he says, a guy was looking for CMs in a few local boards for a project. Topics are deleted now, so can't find them. His TG account, his Telegram account was Sandy123. So I contacted him. The project is openalexa.io, and it is clearly a scam. Very bad one, as you can see, as soon as you scroll through the website. And he lists all of the information for the registration of the website, which isn't that important. But here are the levels. And you can see if you're on the video, level 1, level 2, level 3, level. It's just a typical Ponzi scheme, right? Where the money is being funneled up to the top. What else do we have going on? Other people. There's a bunch of messaging going back and forth here where he's just documenting how the dang thing works. New Tilda, legendary, 5-coin, super active on Bitcoin Talk, says a very rudimentary Ponzi scam indeed. Rickafip, another. Seems like this Telegram username is also connected to another one. Bounty Manager, who is also known for an account sale. Here's a thread. I wouldn't be surprised if the same guy is involved in that recruitment for Open Alexa Ponzi scheme. See what else anybody else is saying here that might be of interest. All right, well, that pretty much covers it. But a bunch of OGs that are very active and been around the crypto space for a long time in Bitcoin Talk also calling out this scam. So be careful, friends. You know, hey, if you go there and you get an airdrop and you get a little bit of Etherlight, you know, if it ever does get on Binance, like they're, saying it will, or any other legitimate exchange where you can sell and make some profit, and no big deal, no harm, no foul. But be very cautious of getting pulled into anything. When I watch this video, it has all the same marketing tactics and sounds and strategies as BitConnect. And as we know, BitConnect ended up being a Ponzi scheme that where the team ended up just folding basically, and they also were, the authorities started to go after them. So just be careful about it. That's all. I'm gonna throw this caveat there of, as always, want to be humble, and could I be wrong? I could be wrong, but boy, oh boy, the evidence just looks overwhelming at this point. To me, you do as you will. Do your own research. So basically, I'm throwing this out there as a warning to you. Before you jump into this stuff, do your own research, especially if you're going to put any significant amount of money in there. If you're going to just play around with a little bit and see if you can't just get a quick return and make some fine. You know, maybe it's coming at the harm of somebody else. Somebody at the bottom is going to get screwed or burned or whatever. But, you know, hey. All right, moving on to our last segment of the day, which is the cryptocurrency terminology. Let's just wrap up with this, with the M's. Mainnet. What is a mainnet? An independent blockchain running its own network with its own technology and protocol. It is a live blockchain where its own cryptocurrencies or tokens are in use, as compared to a testnet or projects running on top of other popular networks, such as Ethereum. Margin call. When an investor's account value falls below the margin maintenance amount, the broker will then demand that the investor deposit additional money or securities to meet the minimum required maintenance amount to continue trading. Margin trading, a practice where a trader uses borrowed funds from a broker to trade a cryptocurrency, which forms the collateral for the loan from the broker. It can be relatively risky, for inexperienced traders who may receive a margin call if the margin moves in the opposite direction of their trades. Margin bear position, the position you are taking if you are going short on margin. Margin bull position, the position you are taking if you are going long on the margin. So if you think the market's going down, you're going to take a bear position. If you think the market's going to go up, you take a bull position. Very, very dangerous. Very, 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 very dangerous, especially in a volatile market like cryptocurrency. Market, an area or arena, online or offline, in which commercial dealings are conducted, usually referred to as the, quote, crypto market, which refers to the cumulative cryptocurrencies and projects operating within the industry. Market capitalization. I hope you know this one. We talk about market cap every single day, also known as market cap or MCAP. That is the total capitalization of a cryptocurrency's price. It is one of the ways to rank the relative size of cryptocurrency. See, circulating supply. So it's the circulating supply times the price. That's how you derive what a coin's market cap is. Market order, buy, and market sell. They are a purchase or sale of a cryptocurrency on an exchange at the current best available price. Market orders are filled as buyers and sellers are willing to trade. This is in contrast with limit orders at which a cryptocurrency is sold only at a specified price. So if you're on an exchange and you're trying to pick up a crypto and the market's moving quickly, it seems, in a particular direction, and you don't want to put a limit order because you're just like, I just want to pick this thing up now and I don't have time to try to, or I don't want to try to wait for a little bit of a drop or whatever, or a little bit of an increase to sell. You just put them in a market order and boom, it happens right away. And it just kind of goes to the best possible price in that moment. Masternodes. What is a masternode? Boy, the masternode tokens, this was a huge thing back in 2016, 17, but they sure have lost their luster. Almost no one talks about masternodes anymore. But a masternode, they are a server maintained by its owners, somewhat like full nodes, but with additional functionalities such as anonymizing transactions, clearing transactions, and participating in governance and voting. It was initially popularized by Dash. I was going to say that, which is noted here anyway. Dash being the largest and most valuable and first mover in this space. Initially popularized by Dash to reward owners of these servers by maintaining a service for the blockchain. This was very, very, very profitable back in the day. If you got into Dash early on, or you got into another masternode early on, it was sort of like mining, but without having to have mining hardware, sort of like proof of stake, but different. Providing the services to keep the network going. And if you were early on with a masternode, the rewards were immense. And then as more masternodes came on, it became less because the rewards got distributed out across all the different masternodes. Max supply. What is max supply? The best approximation of the maximum amount of coins that will ever exist in the lifetime of cryptocurrency. The circulating supply and total supply. Merkle tree, a tree structure in cryptography in which every leaf node is labeled with the hash of a data block and every non-leaf node is labeled with the cryptographic hash of the labels of its child nodes. Hash trees allow efficient and secure verification of the contents of blockchains. As each change propagates upwards, so verification can be done by simply looking at the top hash. Yeah, it's heady stuff right there. Merkle tree. Good luck. I'm trying to understand that. MetaMask, an online digital wallet that allows users to manage, transfer, and receive Ethereum, operating as an extension to a regular browser. If you've been in crypto very long, you've probably interacted with MetaMask at this point. Micro Bitcoin, UBTC, 1/1,000,000th of a Bitcoin, or 0.000001 of a Bitcoin, often confused as a fork of Bitcoin. It's not a fork. We also refer to these as Satoshis. Microtransaction, a business model where very small payments can be made in exchange for common digital goods and services, such as pages of an ebook or items in a game. Of course, microtransactions are not viable with Bitcoin or Ethereum. So it's one of those use cases that other crypto platforms will pick up where the fees are negligible. Mineable. Is a coin mineable? Some cryptocurrencies have a system through which miners can be rewarded with newly created cryptocurrencies for creating blocks through contributing to their hash power. Cryptocurrencies with this ability to generate new cryptocurrencies through the process of confirmation is said to be mineable. Not mineable. Some cryptocurrencies are generated only through other mechanisms, such as annual inflation through staking. These cryptocurrencies are said to be not mineable. Miners. M-I-N-E-R-S, not to be confused with M-I-N-O-R-S. Contributors to a blockchain taking part in the process of mining. They can be professional miners or organizations with large-scale operations or hobbyists who set up mining rigs at home or in the office. Mining, a process where blocks are added to a blockchain, verifying transactions. It is also the process through which new Bitcoin or some altcoins are created. Mining contract, another term for cloud mining, where users can rent or invest in mining capacity online. Generally not profitable, unless it's speculative. If you're mining something that you think is going to go up significantly in value, but in real time, generally not profitable. Mining pool, a setup where multiple miners combine their computing power to gain economies of scale and competitiveness in finding the next block on a blockchain. Rewards are split according to different agreements, depending on the mining pool. Another term for this is group mining. So with a lot of crypto, there's just no way that you're going to be able to solve a block on your own. It could take months and months or years even. So you join a mining pool and that hash power gets combined. Blocks get solved, and then the rewards get distributed out evenly to the miners. Mining reward, the reward resulting from contributing computing resources to process transactions. Mining rewards are usually a mix of newly minted coins and transaction fees. So let's just stop and talk about this for a little bit. And I want to try to simplify this for you. So when you take a proof of work system, which is a mineable coin, where mining is involved, such as Bitcoin, the miners are like the bank. They are processing the transactions. The blockchain is like the database. But the miners interact with each other. They form consensus. So what happens is Bob sends a transaction to Alice in a wallet. He's going to send 0.01 Bitcoin. That transaction gets put into the mempool, gets sent out to the miners. They have to process that transaction by solving a complicated hash algorithm. Then once that's solved by a particular miner, it gets sent back to the chain. The miners have to come to consensus that it's a legitimate and valid block. And then it gets entered into the database, basically onto the blockchain. And that's the process. And if you're new to this, a mining rig is essentially a computer. You can think of it like a server, a computer. Now, of course, with Bitcoin and other coins that are mined with ASIC miners, an ASIC miner is a piece of hardware that is built specifically just for mining on that particular algorithm that is being used. But again, they're just computers that are connected to the internet that are receiving these hashes on the blockchain that are then processing it, solving it, sending it back. It's as simple as that. I hope that helps you understand. In a proof of work system, it's sort of similar in that you have nodes that are running, or pools, staking pools that are running on servers, and these are processing the transactions and doing this similar type of service. And they receive a reward for that as well. And then as you stake, you're also securing the network because those tokens that are delegated, if it's a delegated proof of stake, help that staking pool solve blocks based upon the amount of tokens that are staked to it. So it's very similar, but yet different. A mixing service. Oh, wait, minnow. We almost skipped over minnow. What is minnow? It's another term used to describe fish, which are just cryptocurrency holders that don't have much, as opposed to whales. Mixing service. What is a mixing service? Also known as a tumbler, it is a service to improve the privacy and anonymity of cryptocurrency transactions by mixing potentially identifiable or tainted cryptocurrencies with other unrelated transactions, making it harder to track what the cryptocurrency was used for and who it belongs to. CoinJoin being an example of this on the Bitcoin protocol. Mnemonic phrase. What is a mnemonic phrase? A mnemonic phrase, also known as mnemonic seed or seed phrase, is a list of words used in sequence to access or restore your cryptocurrency assets. It should be kept secret from everyone else. It is a standard in most HD wallets. Mnemonics. Mnemonics are memory aids with a system such as letters or associations that help in recall. Mobile wallet. A mobile wallet is a crypto wallet installed on a mobile phone. Money transmitter, money transfer license. In the legal code of the United States, a money transmitter or money transfer service is a business entity that provides money transfer services or payment instruments, whether it is real currency, cryptocurrency, or any other value. Money transmitters in the U.S. are part of a larger group of entities called money service businesses or MSBs. Moon. A situation where there is a continuous upward movement in the price of a cryptocurrency, often used in communities to question when a cryptocurrency will experience such a phenomenon, saying, when moon, when moon. It is usually combined with when Lambo. When is the price of this crypto going to just take off and go to the moon? And then, of course, we saw this, and a good example of this, probably one of the most notable of late, has been when Elon Musk created his meme with the Shiba Inu on a rocket ship or whatever it was, and we're going to the moon, right? And then he said something like, I'm going to put a literal, actual Doge on the moon, which, what does that mean? Take a wallet with Doge in it up to the moon, I suppose. It's not like there's a physical Doge coin. Anyway, moving average convergence divergence, or MACD, MACD, a technical analysis method. It is a trend following momentum indicator that shows the relationship between two price moving averages. The calculation is done by subtracting the 26-day exponential moving average, EMA, from the 12th day EMA, used in technical analysis. Mt. Gox. Mt. Gox. We talked about Mt. Gox earlier today when we were talking about the Grayscale and Stellar XLM, and I mentioned Jed McCaleb. So let's get a little definition on Mt. Gox. Mt. Gox was one of the first websites where users could take part in fiat to Bitcoin exchange and vice versa. In 2014, Mt. Gox was shut down after about 850,000 Bitcoin were declared lost or stolen. Mt. Gox was created in 2006 by Jed McCaleb, who named it after Magic, the Gathering online exchange, where users could use the cards like stocks. Jed later sold Mt. Gox to Mark Karpeles in 2011. Multisig, multi-signature addresses provide an added layer of security by requiring more than one key to authorize a transaction. This can be really good. There are some multisig service providers that will help to ensure that your crypto can remain safe in the event that you lose your keys or a key. They will hold one key. You can hold two keys. So you can give a key to your spouse or something, and then your spouse can go with that key and access with the key held by the third party the funds, but they can't access it on their own without either of the other two keys. So just a useful thing. Okay, friends, that's a wrap for today's crypto market update. Appreciate you spending your time. Be careful out there. Remember, it's always a great day to earn and stack more crypto. Be sure to go to blockthrasher.com and sign up for an account. I keep saying I'm going to be posting there regularly, and I will as soon as I just get through some of this little bit of hump of busyness. And have a great, just a phenomenal weekend. I'm sure the weather is going to be quite good in most places forecasts are that it will be warm. Great time to get outside, get some fresh air, get away from the computer screen for a little bit, spend some time with friends and family. Find somebody to show some love to, encourage somebody, help somebody. It's sorely needed, especially in this time with the COVID-19 84 situation that continues to go ongoing. All right, talk to you soon. Have a great day. Love you now. Bye.